Good morning, everyone. This is Caitlin Mulhern, and we will be starting at exactly 10 o'clock, so feel free to get settled. And before we get started, we will just do some housekeeping items. So we do have a large audience today. Folks are still signing on, so thank you for joining. Good morning, everyone. This is Caitlin Mulhern.
Hi, good morning. This is Livia Bork, the Assistant Vice President of Housing and Community Investment. I am also the Operations Manager. We are so glad that you are all here today.
Before we get started, we just want to do some housekeeping items. First off, can everybody hear us okay? And if you do hear us properly, can you just use the raise hand feature, please?
Perfect.
Wonderful. Thank you. And we will be recording today's session today. And before we get started, just please take note of the documents that we have under the handouts tab. We're going to be referencing them today. and it does include today's PowerPoint presentation, so you'll have those slides to circulate in addition to the recording once we complete the live session today. And if you have any questions, please use the questions tab.
Okay, so I think we're going to shut the camera off just for so that you have some additional real estate on your screen. You don't need to look at us the entire time. So we have a packed agenda today, and we'll be going through all facets of the program. As Caitlin said, feel free to put your questions in the questions tab. We'll be answering them at the end, but as you see, we have a lot to get through. So we are so excited to present our Lift Up Homeownership program to you, which falls under the Special Purpose Credit Program. The program is administered through the Federal Home Loan Bank of Boston's Special Purpose Credit Program's written plan, and the plan identifies people of color as recipients to this program and is designed to narrow the racial homeownership gap through extension of credit. Members will opt into the bank's special purpose credit plan by execution of their annual agreement. And you will receive a copy of the special purpose credit plan. So here is our eligibility criteria for the households. We'll dive in deeper later into people of color and the definition there in today's training. All buyers must be a first-time home buyer based on the standard HUD definition, which includes single or displaced homemaker and or has not owned a home in 3 years. Eligible households can earn up to 120% of HUD's area median income, and the eligible property types cover a wide range of properties, as you can see. But just to point out a few examples, manufactured and mobile homes must either be permanently affixed or wheels up, axles down, and the homeowner must take title. So here are our eligible grant uses. Pretty straightforward. We've got down payment, customary closing costs, interest rate buy down up to 2%, and home purchases must be within New England. So just to go over the breakdown of this year's Lift Up Homeownership program, which is, by the way, a pilot program, we have an allocation for 2023 for $2.5 million. We will be doing a member cap for $250,000, and the funds will be available on a first come, first served basis. $50,000 will be the maximum grant per household. So we'll get right into it. Let's talk about the member application and all of the other processes. First of all, we have the application period and deadlines. These are critical dates and checkpoints that your institution will want to keep in mind when applying for the Lift Up Homeownership program. There will only be one funding source for this program, which will be July 10th this year. Please note that the application deadline that we're kicking this off on June 1st, so it is fast approaching. So accessing the online application. Just as a reminder to what Caitlin said, this presentation is available in the chat box for download. And we did that so that it would help you to have handouts to help you navigate later on. But what you'll do first of all is you'll navigate to the Federal Home Loan Bank website, and then you're going to follow the directions contained within the document. This is especially important for first-time users. Please remember that everyone must submit an application, even if you are currently using any of our other programs. And just as a reminder, please do not share accounts. So we're just going to go through the next slides, but again, they're just as a resource for you. It's basically a step-by-step of how you put in that application process. Some of you are already familiar with it, but this will help the others navigate to it and submit your applications to be a part of the Lift Up Homeownership program.
And if you ever have questions, feel free to reach out to us. We'll be providing our contact information, but just so you have the step-by-step process, especially if you are new to any of our homeownership programs.
Yep, absolutely. So with that, I'm going to hand this over to Caitlin.
One of the items we do want to train on, especially if you are new to the Federal Home Loan Bank or any of our down payment assistance programs, is at time your institution submits their online application to be able to administer the Lift Up Homeownership program. We do require your institution to provide what we call at the Federal Home Loan Bank of Boston a member concession. And these are examples of what we deem an acceptable concession. And some examples that we typically see are either lump sum or individual line items within a closing disclosure, whether it is a credit or waiving or reducing a fee. If it is a below market rate, just remember to note what your estimated standard rate would be and what your below market rate would be for this eligible buyer. If it's, half a point, we don't have a monetary threshold or minimum, just to deem that it should be reasonable and a special incentive to be able to further enhance that buyer's eligibility to buy a home. And then the other part of the application, this is just to give you an idea of what is acceptable under our list of approved organizations. Each first-time homebuyer does have to take homebuyer education and counseling. That is tied to our regulated programs that they have to obtain that counseling component as well as the education. We do have a list on our website, and you can use this presentation today to go directly to our list of approved agencies on our website. And then here's some information. We do understand that some institutions allow online educational components, and the sources that we only allow are eHome America, Finally Home, or Framework. And just note that if they do the online education, they are required to do the counseling component. And this is pretty in trend with the housing finance agency's requirements. And here's an example of an acceptable certificate. If you ever have questions, like I said, please use us as a resource. We're happy to look this up, especially if they have obtained this counseling and education prior to coming to your institution for that first mortgage financing. And now we're going to go into enrolling homebuyers. We're going to be referencing a lot of the materials that are in the handout tab today. And like Livia said, we have a lot of information to cover today. But for people, especially if you've never used our programs, to get an idea of what is required of the homebuyer, but then what is also required from your member financial institution. The borrowers do have to complete the disclosure. They need to identify all persons residing in the property and income sources for the entire household. So this differs from secondary market, and we do not go off qualifying income. We'll talk about that later today, but we are different from Fannie and Freddie. We're compliance, and we are 12 months perspective, and we include anything anticipated in the future. So when people are new to implementing and offering our programs, I like to tell people we're a blend between HUD, Fannie, and Freddie. And we will provide examples of the 120% area median income limits in today's training. And we'll also be referencing the 2023 HUD income limits. And as Livia mentioned, that it does have to be for first-time homebuyers. And we do require a fully executed P&S for that primary residence. So we do not accept offers, and this is because this program is on a first come, first served basis. So you really should have a fully baked first mortgage application when you're submitting through our portal under the enrollment, which is your borrower's application to reserve the money. And then we do have a minimum requirement that the buyer must contribute $1,000 of their own funds toward the purchase transaction. So when your institution is interviewing and identifying your buyers and the income guidelines, a household member is an individual who is expected to live in the house at time of closing and moving forward. The total household income must be verified and cannot exceed the targeted area median income limit, currently based on the HUD guidelines. So as we said, for the Lift Up Homeownership, it is up to 120% of the area median income. And some additional factors that you're going to consider specifically is that it's all members of the household, which do include 18 years or older. Their income is factored into the total household income. For situations that 18 years or older adult is a full-time student, our income guidelines are very detailed, and we'll be sharing a hyperlink with that today, and you can use that as a reference. We would cap them off at a certain income threshold of $480 annual, and our income calculations have a whole section on pages 3 and 4 that give you a deeper dive on household makeup. We do appreciate that it's not everybody in the house is of a familial status. There might be situations where there are non-occupant co-borrowers, which we do permit. If there are minors in the household and there's only 50-50 custody, how do we handle that? Our income guidelines are very detailed and really do cover the gamut on what is the household makeup and how your institution can navigate that, and just letting your buyers know that that disclosure, the first 4 pages are very detailed and explain all this information to them. So it's really important when you're interviewing them, take the time to let them know that the first 4 pages are informational and something that they should always reference if they ever have questions or concerns. So with the Lift Up Homeownership program, because this is a people-based program, as Livia had mentioned, we do require that the homebuyer self-certification to be executed in order to qualify for this program. Only one borrower on the first mortgage must identify as a person of color. The entire household does not have to identify and qualify. This is separate and apart from what your institution's standard HMDA form when you're completing your 1003. And we have received some questions about this. That's why we would like to just share a little screenshot of what does it ask. And this is a preview in addition to the handouts of what this form looks like. And if you ever have questions, please reach out. So the income calculation and best practices, as I mentioned, you have the hyperlink in today's PowerPoint materials to go over the income guidelines if you are not familiar with them. They are the income guidelines for our Equity Builder program, our Housing Our Workforce, our Affordable Housing program, as well as our Lift Up Homeownership. So all of our homeownership programs operate and calculate income the same way. As I mentioned, we are prospective and it's annualized over a 12-month period, and we recommend you doing a manual calculation against the income system, because sometimes there are situations and unique circumstances that maybe it can't accurately project out. And this varies from your secondary market income. So if you ever have any explanations or unusual scenarios, such as, maybe they didn't start their job until recent, we're prospective. We're not like Fannie and Freddie where there needs to be a 2-year seasonality. And our system automatically generates the HUD income limits based on the data that's input, which is that subject property. So once you're putting that subject property, that is how the income limits are going to be triggered. And with that said, here is an example of in Boston, specifically for this year, for a household of 4. So if you are familiar with our Housing Our Workforce program, because the HUD income limits do not go past 80%, in order to get to that 120%, we take the 50%, which for this example, a household of 4 is $74,200. We're timesing that by 2 to get it to 100%, and then we're further multiplying it by 1.2 to get to that 120%. So the example is for this in the city of Boston, a household of 4 is $178,080. We do not use the median family income, which might be different from any other housing finance agencies. And this is because we offer our programs throughout New England, and each HFA has different methodologies. So we keep this in a line with our regulated program, which is our Equity Builder program. So that way, if your institution is offering all 3 of our homeownership programs, it's the same data and resource when you're working with your borrowers, in case you don't know what they're eligible for at time of your first mortgage application. So member enrollments, when you are submitting the enrollment, it's a 2-part series. So the first part I just went over is the income eligibility. And then once the income is eligible, your institution will be able to enroll the households. Your organization is required to offer an eligible mortgage product, which does include conventional, fixed rate, ARM loans, which we will not accept anything under a 5/1, and then our maximum total rate caps cannot exceed 2 and 6. We see a lot of FHA loans. To give you examples, if you are in Massachusetts, we see a lot of people layering ours with the Mass Housing products or MHP1 mortgage, any other within New England HFA loan products. You can portfolio your loans, sell them on the secondary market, and we do see an occasional USDA or VA loan. So we're basically complementing what you're currently offering, and if you're ever unsure, once again, reach out to us. Also, the home buyer households housing, that's our front debt to income ratio, cannot exceed 37%. And anything over, our system does require you to enter the 3 compensating factors that we provide here. And anything outside the 3 examples would require your institution's due diligence, assuring that ability to repay. We're not going to go over this completely because we do have a lot of questions to get to, as well as the rest of the material, but here's some tips and tricks when you are offering these programs. We do recommend that you promote the programs, layer it with other down payment and closing cost assistance programs outside of what the Federal Home Loan Bank offers. You can't layer it with our EBP or HOW, something to note. And I think this is a great reference, especially when you're internally training your staff members. All right, now we're going to get into the requesting disbursement. So your institution is going to be table funding the grant. And once we have reviewed the enrollment submission through our online portal, we'll issue you an email approval notice. Your institution will then be able to close on your first mortgage financing. And we're going to talk about the components when you are requesting the disbursement, which is the reimbursement of the grant. You have to do this through our online system, and then your Ideal Way account with the Federal Home Loan Bank of Boston will be reimbursed for it. We do require our Lift Up Homeownership grant to be reflected on the closing disclosure, and we do have our own mortgages and notes that are to be executed. And first-time homebuyers, as I mentioned, do have to complete education and counseling, and that certificate has to be uploaded at the disbursement request. You're going to then identify and document that member concession that I mentioned at the beginning of application. So at application, this is just to give us an idea of what your institution will be offering. You're not married to it. And at time of disbursement, you can deviate from what you say. You just need to demonstrate one of the examples that I provided. And then making sure that at least one person on your first mortgage, so your borrower, continues to qualify as a person of color. And when we're looking at the documents, like I said, you're gonna enter all the information through the online system. It's basically a paint by numbers when you're going through that closing disclosure, just making sure that you have all your documents and you're entering everything that is in our portal. And you're gonna be providing your CD, your retention documents, and just making sure that everything correlates to the home buyer. And this is just a rundown. We encourage you also to use our member checklist to help your institutions QC before closing the Lift Up Homeownership grant. And we did include that in the handouts tab today. And if you specifically are using an FHA loan, we have a specific deed restriction mortgage template to use. And that's because FHA has specific legal jargon that needs to be incorporated. If your property is an affordable unit, our standard mortgage and standard note does include that, but just in case, do not record both of them. It's one or the other for the mortgage template specifically. And then here's some more tips and tricks after you close. We're going to talk about the monitoring and retention, and Livia will be covering that part of the presentation today. But do reach out to us if a buyer, once you've closed, does decide they want to refinance, whether it's a home equity or a rate and term, even a cash out. Really just refer to the pages 3 and 4 of that Lift Up Homeownership disclosure for your buyer to keep on hand after the closing. We know when people are signing their lives away, it's a lot of paperwork and sometimes it gets lost in the shovel. And do not tell them that they aren't eligible to refinance, and do not try to calculate any repayment if they do decide to sell, which, like I said, we're going to be talking about that in the monitoring and retention.
Perfect. Thank you so much, Caitlin. All right, so on to monitoring and retention. So the member is to remain the main contact for the household and should provide them with contact information. You will maintain their file for 5 years, because it is a 5-year retention period, and execute all discharges in accordance with standard mortgage practices. And I really urge you to talk to the households and just make sure that they understand that you are their main contact. We often get calls from household members that are very confused when they have questions about selling or refinancing, and they contact us. We ask that they work with you, and we in turn will work alongside you to help you with those processes. So as I said, the retention period is for 5 years. So what happens if there's a refinance? The Lift Up Homeownership program is not lien sensitive. We will sit in any position. So it may be subordinated. Foreclosure or death of an owner, the grant can be forgiven, but as you can see in the small wording at the bottom, there is some documentation that is required for that. And if there is a sale that is going to occur, there is a repayment calculation that has to be done by us, which we'll get to in a minute. After the 5-year retention period, the grant is forgiven, and the member must complete the discharge. So putting something in place so that you remember to discharge that is really important. We often get calls 5, 10, 15 years later saying, you know, hey, I'm trying to sell my house, but this hasn't been discharged. So that would be very helpful if you could put a mechanism in place to complete
I just
that.
want to add too is even if you're selling that first mortgage, you still have to monitor the grant. So if
Good
you're
point.
selling this, whether it's to an HFA or somewhere else on the secondary market, you can't sell the grant. So you're going to have to monitor that 5-year retention period for the grant. To Livia's point, sometimes homeowners will get directed that, oh, we sold your loan to such and such institution. They're going to execute it, or the Federal Home Loan Bank. The way our instruments are written, you technically are the lender and we're only the funder of the grant.
Perfect. Thank you for that, Caitlin. So in the event of a refinance in which the owner would like to subordinate, you would reach out to us and we will supply you with the proper templates for the program that you're using. You'll then fill them out and submit them back to us. We will have our legal department look at them and approve them. We'll send them back to you. And then once you have them executed, you'll supply us with an electronic copy. So that's a pretty easy process. Then we have the recapture on sale. It should be a repayment on sale, transfer, assignment of title or deed. So if this occurs prior to the five-year retention ending, reach out to us. Please do not try to complete the calculation yourself. The calculation is extremely intricate. It is a 2-tier review that we complete here. So we will do that calculation. If there are funds that need to be returned, we will let you know. We will let you know either way what the calculation comes out to be. And then the member would, in the case that there are funds to be returned, the member would return them and would execute the discharge of the Lift Up Homeownership grant. So if you want more information on the calculation for that, please look at our procedures, which again are in the handout. So we went through a lot of information. We do have questions in the question box, but we wanted to provide you with also contact information for the team. As you can see, you have Caitlin, who is the program manager set aside. I'm sorry, the homeownership programs manager, and then the analyst and myself, who you should feel free to reach out to. So with that, let's get to some questions in the chat box. We have some that are multiple. So the first one is, can the person of color household member be a child? And the answer to that is no. It needs to be one of the borrowers must be on the must self-certify to being a person of color.
And they only need to select one of the race ethnicity criterias, which is why this is different than your HMDA, because depending on if that's a face-to-face application or they don't wish to furnish, your institution is not going to make that assumption for them. They have to complete that information.
Yeah.
So one of the questions is, what happens if the borrower checks, I do not wish to furnish? If they do not wish to furnish the information, they're not eligible for the program. The disclosure does say it's optional because legally you cannot make them complete this, but I would highly recommend explaining to them, because this is a people-based program outside of your Fannie Freddie 1003. In order to qualify, they have to at least certify and select one of the criteria on that disclosure.
Great. The next one is the same.
How recent must the home buyer education and counseling take place? Do you require a certificate for the counseling as well? Great question. So We say 24 months either at time of enrollment or at time of closing, just because sometimes when borrowers are going through the pre-approval or pre-qual process, they might have already completed this education and counseling beforehand. So we want to try to be able to factor in that. And of course, if for some reason it is slightly outside of that 24 months, just communicate with us. We're happy to work with you. It's just really important that these first-time homebuyers get that education and counseling component. And one of the questions also a part of this is, do you require a certificate for the counseling as well? Typically, they're all in one certificate, that what we've seen on our approved agencies. If you have more than one certificate, feel free to upload them. And if you're ever unsure, please reach out and feel free to send us those certificates. There's no MPPI on there, so we're happy to take a look over before and making sure it is an approved source.
So Caitlin, our next question is, are we allowed to use the 2023 HUD income guidelines for EBP and how as well? And I'm thinking instead of, oh, I see, the 2023 HUD income guideline. Are they talking about the income guidelines or the AMI here?
They're talking about the area median income limit. So all of our programs effectively now are under the 2023 HUD area median income limits. And that's because when we kick off our other two homeownership programs for those who participate in EBP or how, when we administer and release that first batch of money, HUD sometimes is a little delayed, so we have to use the prior calendar year. And with the Lift Up Homeownership, because we're going to be deploying money on July 10th, our system will automatically default to 2023 for that program, and our EBP house system also is updated.
Oh, the next one is a great question. Do all borrowers need to be a first-time home buyer or only one? And if only one, does that person need to be a person of color?
Great question. So for first-time homebuyer education and counseling, we say only one person in the adult household has to take education and counseling. But when you're talking about, do all borrowers need to be a first-time homebuyer, the answer would be yes. And it would need to be the person of color as well. If you have any questions or any unique scenarios, feel free to reach out to us, especially if we are defaulting to the HUD definition. So if they have not owned a home in 3 years, this is a pilot program, so we do understand that there might be some unique scenarios that that we might have not anticipated potentially. Reach out to us. We're more than happy to work with you, but I hope that answers your question.
All right, triple check that they must be a borrower on the note and cannot be just a title holder, question mark.
Yes, it does have to be your borrower on the first mortgage.
Perfect, thank you. Kenneth mentioned in the initial webinar on the 11th that the Federal Home Loan Bank was meeting with the FDIC. Has that happened yet? Yes, it has, and there have been additional meetings with other entities as well. Do you anticipate a second round of funding given the 2.5 is likely to go quickly? No, this year 2.5 has been allocated for the pilot program. Our hopes is that this will be a big success and that we will have it again next year. What would be the best practice to ensure that at least one borrower continues to qualify as a person of color? That is a great question. What we're basically trying to get to here is that within the note system, there is a checkbox. You're not actually having them certify again, but you as the member are basically certifying that the person who's certified as a person of color still remains as part of the household. Nothing has changed. They still qualify. let's see. Are 7/6 ARM products acceptable?
So currently, no. If your institution has received an approval to offer this product, it would just need to be vetted. We do appreciate and understand in high interest rate environments that a lot of buyers are requesting or members are offering ARM products. Because that adjustment period is every 6 months, we don't deem that that necessarily is viable for a first-time home buyer, especially in this market. If there's compelling information and legitimacy as to why that is being offered, feel free to reach out to us.
So one person is saying that, who I was trying to help earlier, that they cannot locate the tab where the handouts are. Prior to us ending this call, I'll bring back up the slide with all of our contact information. And if you could just, anybody who couldn't get the documents, if you could just write down one of the emails, me or Caitlin's particularly, would be great. We will email you back the documents that were within the presentation. The next question is, can you clarify first-time home buyer? You said it has to be all of the borrowers, and it also has to be the person of color. So what Caitlin was saying is that there are multiple definitions of a first-time home buyer, and I would definitely say to look at our procedures, because it's not just a first-time home buyer, like somebody that just hasn't owned a home before, but that there are other clarifying or other exceptions that would constitute you being considered as a first-time home buyer. So look at our procedures. Caitlin, I believe that it's if you haven't owned a home within the last 3 years.
Single, displaced homemaker.
Yeah, so review the procedures, and first of all, you'll see the criteria for what is considered first-time home buyer, besides the obvious that you haven't owned a home before. And then what Caitlin was saying is, among the borrowers, there must be one person that can self-certify to being a person of color. Sorry if we made that too complicated. Let's see. Sorry, we've got a lot of questions. Is a person of color anyone other than Caucasian? We have given you a list, and it's also within the self-certification of what we consider to be a person of color. There is a number of them. Maybe we could actually bring that slide back up so that they can see the list. So here is the first-time home buyer self-certification, and here is a list of individuals that would qualify as a person of color.
And as we mentioned, if they don't wish to provide this information, no, your institution cannot guess for them. They do have to complete this self-certification. So they are not eligible if they check, I do not wish to provide. And that's also mapped out in our Lift Up Homeownership's procedures as well.
Will you provide marketing materials in a sample press release as you have with your Equity Builder program and Housing Our Workforce program?
Yes, we will be doing that, and we will do that how we typically do in our annual fashion, where once your institution has been approved to offer, and it will be under the community lending platform. And if you, for some reason, don't have a login, and maybe it's somebody in your marketing department, please feel free to email me, and I'm more than happy to provide those materials for that person in your organization. They won't be available until we have gone through the member application process.
Some really great questions that are coming up. What happens if the self-certification is different from the HMDA information provided? I, as the member personally, would want all of my, we're not going to look at the HMDA data. Is that right, Caitlin? We're not looking at that, but as a member, I would certainly want all of my documentation to line up.
I think the confusion is sometimes when a borrower is faced to look at the HMDA information on an application, because it is so detailed, and just letting them know they only have to select one, whereas the HMDA, they can select multiple, and that's fine. But I would also echo to Livia's point, if something is completely off, for example, if they do select that they are white or Caucasian, but their self-certification says something else, I would have that conversation in general, just because it is a little different. And
So what is your, are you done with that one?
Yes,
Sorry.
yes.
Okay. So what is your stance on people that identify as Middle Eastern, North African, Nina, they don't feel like they fit in any of these categories? I was actually looking into this, and I believe we would accept, I know we would, them fitting into the Asian, Middle Eastern. Actually, I reviewed it in several different websites and did some research into this. So that is what I would suggest there, is that they would fit into the Asian people of color category. What is the turnaround time for an application? Great question. So let's go back. I'm not sure if you're talking about an application or enrollment in particular, if you're just using the terminology a little bit different, but we can go back to that slide because I do think it's really important. So your applications are going to begin on June 1st, and you have to get them in by June 22nd, by 3 p.m. And then we're going to do a really quick turnaround to look at the applications and get the members signed up and cleared to participate with this program. That approval is going to take place on June 26th. And we look to have the Lift Up Homeownership agreements by July 7th via Adobe eSign. And then, like I said, the money is going to drop on July 10th. So really quick turnaround here. However, if you truly did mean an application as far as an enrollment for a household member, maybe you can speak to that, Caitlin.
And if it's specifically for a household member, we say that our turnaround time for enrollment, which is your institution's initial submission and reservation for that household, it's 15 business days. And then, of course, we try to turn them around as quickly as possible, but we are conducting this in conjunction with our other 2 homeownership programs. So we might be more at that 15-day business turnaround time. So just making sure when you're looking at your closing date that you're being thoughtful, and we don't ever want you to put in a position where your buyer is in jeopardy of their deposit if they've already executed a PNS.
Somebody asked if the enrollments are open now. Nope. First step is to get your application in, get the application approved, and then the enrollments again begin on July 10th. The money will be dropped at 9 a.m.
Yes, 9 a.m.
9 a.m. the money will be dropped. If the lender is required to complete the HMDA info based on visual observation and it differs from the self-certification, what are next steps?
As Livia mentioned, we are not looking at the HMDA info. That's a bigger conversation when you're talking to your borrowers. And back to someone's point about, Middle Eastern, there are unfortunately a lot of persons of color that are unsure what they identify as, which is why we're looking for them to self-certify and at least select one category. And we are taking a similar approach to HMDA. It's just not as detailed. And also, in addition, your loan application sometimes does not have to be face-to-face, and it could be online. So we're not looking for you to complete that self-certification. It really needs to be on that buyer on your first mortgage, at least one person. And that is the part of the program which we understand can kind of be initially challenging to navigate. And this is kind of the first of its kind in New England. But feel free to reach out, and just making sure that you're meeting the spirit of the program. The goal is to narrow the racial homeownership gap.
Yeah. It was mentioned at the beginning of the presentation, an execution of annual agreement. What does that mean? Does the institution need to be part of the Federal Home Loan Bank previously? The agreement that we were referring to was the agreement with the Lift Up Homeownership program.
But in order to offer this program, your institution does have to be a member at the Federal Home Loan Bank. So if there are organizations listening, to be a member of the Federal Home Loan Bank of Boston, you must be a member financial institution, which typically includes banks and credit unions of a lot of sizes, whether you're a community bank or a larger savings institution. We do not have membership specifically for mortgage companies, and all of your buyers must go directly to an approved member of the Federal Home Loan Bank of Boston to be able to access this program. We don't directly work with home buyers.
Yeah. And if you have further questions about that, certainly reach out to Caitlin or myself, and we'll put you in touch with one of our relationship managers. They're the ones that really handle that, those types of relationships. Let's see what else we have here, Caitlin. I think that's about it for the questions. I think we hit all of them. On the screen right now is our information, our contact information. As noted, I know that there was at least one person who had trouble getting the documents, and so if you can send an email, we'll be happy to email you those documents. But I don't think I see any other questions. Anything else, Caitlin, before we wrap up?
No, just thank you everyone for taking the time out of your days to attend today's training. We hope that it was helpful for you, and feel free to reach out, and we look forward to working with you, whether you are familiar with our other home ownership programs, or maybe this is an opportunity for you to introduce down payment assistance programs. They're very popular with our member financial institutions, and we just look forward to enhancing home ownership with you.
Fantastic. Have a great day, everyone.
Thank you, everyone.